If you want to trade stock options and you're scared or you don't know how to do it, stick around. I'll show you how it's done. Hey guys, this is Mehdi at Choosing Options. And today I want to cover how to start trading options. Um, I'm going to show you how I started. And mostly all the traders I talk to, that's the way they started as well. And what they've done, or what I did 30 years ago or even more, um, was to trade covered call options. Okay, what that is you pick your favorite stock and you buy about 100 shares of it. In my case, Microsoft. I've been trading Microsoft this way for ages. So I buy 100 shares of Microsoft. In your case, whatever stock that you like. And then I turn around and sell a call. I would go, let's say, let me come here, let's see. Let's say, I think Microsoft is trading today, let's say 100, 101. It's trading around 101. So I go 30 days out, July 6th, I think it's about 28 days, but that's close enough. So let's see, July 6th, 101. Okay, here's a borderline. So up to here is in the money. That's called in the money. Anything after that is called out of the money. Oh, these are puts, by the way. Hold on. We don't want puts. How do you change this? I'll be right back. Sorry, they were both calls and puts all together. Um, so up here are the calls, down here are the puts. Okay, here we go. 101. And then I'll go, let's say this is 30 days out, and I'll go one strike, in this case two. Anything above 200, $100, about to close to 30 delta. Look for 30 delta, and that's what you want to do. One or two strikes out, which in this case is 104, and I sell this one. So I buy 101 and sell the call option at 104, and I collect right away. They're giving me 90 cents. So it's going to cost me $100 times 100, because we need to have 100 shares. That's about $10,000. And I turn around and sell this, and you get a discount of 90 cents. In a way, you're buying the stock at a discount. So for instance, if it's trading at 101 and you do this, it's the same as buying this at 110 cents. So you just bought your stock at 90 cents cheaper. So what's going to happen? There are two scenarios. In 30 days, um, if Microsoft passes 104, you've made this gap from 1 to 4. You've made $300. You get to keep the $300, and you already made 90 cents. So roughly about $4. And then you're out. So they take away your stock and you made $300, close to $400. Or the stock hangs around here, 101, 100, or even goes lower, whatever, and you get to keep your 90 cents, and in about 30 days you just roll it back again, go another 30 days and go another delta 30. If let's say in 30 days it's at 101 again, you do another 104. Or if it's at 100, you do 103. If it's 99, you do 102, something like that. So that's how you do it. So I did the background. I did a study on this Microsoft, and it looks like um, every year and a half I double my money doing this. That's amazing. You don't even think about it; it just creeps up. Um, Mathematically, if you look at it, it's delta 30, that's close to 30% probability of in the money. So that means in the long run, if you keep doing this every month, by the way, you got to do this every month, rain or shine. The day expires, just do another one right off the bat, no matter what. If it's higher, lower, stays the same, whatever, you got to do it. It's called mechanical trading. You don't analyze, think about it, don't do anything. Just throw it on, you know. Anyways, I was gonna say, 30% probability of in the money means in a long run for every 10 trades, for every 10 months, in other words, that you trade, um, 3 times, there's a good chance that this stock is going to pass through that threshold. So 3 times out of every 10, 3 times they're going to take it away from you. So if you do the math, let's say $100, 90 cents. This is just call it a dollar. Dollar divided by 101. So for every trade you make in about 1%. Every month you make 1%. And if they take it away from you, let's say 104 divided by 101, you make 3%. So 3 to 4 times a year, let's say you make at least 10% plus another 7 times of uh, 7 times. So 10%. You make a rough at least 20%, on this every year. So even this stock, what I'm trying to get to is if Microsoft goes down 20%, you're still in a positive. So, that's another way of looking at it. It's got to be a stock that you like. You can't just do any stock. You got to like this stock. So pretend that you're buying it, you want to keep it. So, but if they take it away from you, you just turn around and buy it back again and sell another call on it. What else I wanted to say? There is another thing that some traders do, which is called synthetic cover call, which is just to sell a put. I get into it in later on videos. I don't want to go over, confuse you too much. So basically, sell a call and buy a stock. So if you don't have a traders, if you want to open it, discount broker, find yourself a discount brokerage, and usually for cover calls, they let you do it. I mean, if you don't have experience, usually they won't let you trade options, especially puts or naked calls or naked puts, anything. But if you say cover calls, they usually, let you do it. If Another thing I wanted to mention, if you have your own stock and you want to know how it's been done, what's the performance of it during the past couple of years, send me a note. Let me, and I already have the program. I just run it, and I'll let you know how the performance of that particular stock, your stock, has been during the past couple of years. Um, that's about it. I can't think of anything else regarding cover calls. If you have questions, like this video or send me a text, whatever, and I'll, try to answer all your questions. Thank you, guys. Have a nice day. Happy trading. Hey, guys, I forgot to mention earlier when I said 90 cents, it's when I say 90 cents, it's times 100. So every option contract is like 100 shares. So 90 cents is uh, $1. $1 means $100. So $90, roughly about $90 to $100. one, and the second one is to make sure to trade it. Do when you get your broker, or you already have an account, or you want to get a broker, make sure to trade all of this in your paper money, paper account, so to get your hands dirty. But it's easy stuff. You can do it. Anybody can do it. I did it. So trade this in your paper account. I say this in all my videos. Try all my suggestions in your paper account and get a hang of it until then, and then just just do it in your own account with real money. But for now, just do it in paper account and ask questions. Any question you have, just send me an email, you know, text or memo, whatever, and like my video, follow me, and make sure to watch my other videos, and comment. Make your comments. I want to hear about what you think about this. Thank you, guys. Bye.